The JED stablecoin could be a game changer in the crypto space, appealing to an entirely new audience at a time where the industry is already experiencing astronomical growth. This statement was made by the Cardano founder Charles Hoskinson a year ago, and it's enthralling that this long-awaited project is on the horizon. The general crypto winter that started in late 2021 has definitely overstayed its welcome, overhauling the industry. Despite being one of the world's most established cryptocurrencies, Cardano was not spared from the trouble. The series of price dips have left investors wondering whether it's too late to buy Cardano ADA. Cardano has long been seen as a blue-chip cryptocurrency, but the market has reached a point where we can't confidently grace this tag to any cryptocurrency. All high-cap cryptocurrencies have shed most of their weight during the winter. Plus, catastrophes like the FTX crash and the UST depeg, widespread scams and hacks, and the global recession have all contributed to the persistent downturn. Deteriorating investor confidence in Cardano has justified its downward trajectory. Its slow expansion continues to be a subject of concern for investors. The Cardano network might lose relevance in the coming months as more advanced networks step into the game. However, it looks like Cardano will step up the game, especially in terms of mainstream adoption, to reclaim its lost glory and its peak. This year has not been necessarily fair to the global economy. The tenacious inflation, impending recession, and energy crisis propelled by the Russian-Ukraine war have all taken a huge toll on the crypto market. Investors who have little money to spare are now more sensitive than ever about where to park their savings. If the market moves to a more stable phase, it will see increasing traction from traditional investors. Cardano, being one of the most established cryptocurrencies, will be a good alternative to blue-chip stocks. Regardless of the recent setbacks, the cryptocurrency sector continues to grow, led by developments and innovations of major ecosystems such as the Cardano network, which has recently renewed its stablecoin tests. Stablecoins have proved useful to investors in several ways, although it's not always easy to convert crypto assets into traditional money on crypto exchanges. The testnet version of the JED stablecoin has been reactivated to include new capabilities, such as the Vassal hard fork compatibility, active history, and more. All of this according to the announcement shared by the JED team on December 6th. And guess what? JED is the first algorithmic stablecoin to be issued on Cardano's proof-of-stake platform. This latest activation of its testnet has also the added display of the JED and Shin logos and icons on the NAMI wallet used by the JED testers. The launch of the stablecoin has been widely anticipated since 2021. Its white paper is from August of 2021, and it describes it as an algorithmic stablecoin protocol that behaves like an autonomous bank that buys and sells stablecoins for a price in a range that is pegged to a target price. According to Kadi, which is Cardano's partner on the stablecoin development, the mainnet version of JED is expected to go live in January of 2023 after a successful audit has been conducted, of course. During the Cardano summit in November, Kadi's CEO, Shahab Bargeffen, commented on the mainnet date and said, "Recent market events have proven again that we need a safe haven from volatility, and JED will serve as the safe haven in the Cardano network. Not only do we need a stablecoin, but we need one that is decentralized and has on-chain proof of reserves." JED is everything Bargeffen described, and he believes that it could become the top stablecoin on the Cardano network, given all the integration partnership already signed up for it. The stablecoin is Cardano's attempt to develop a price-stable digital asset backed by ADA. By sending ADA to a given smart contract address on Cardano, users will receive the same dollar value worth of JED in return. Similarly, by sending one JED back to the smart contracts, the sender will receive $1 worth of ADA. However, this model could theoretically collapse if ADA were to experience major downside volatility, causing circulated JED tokens to quit being fully backed. As a result, the smart contract will also include a reserve currency, Shin, to cover ADA's price fluctuations and ensure the price stability, as well as guarantee a collateralization rate of 400 to 800%. Unlike JED, Shin will not be price pegged, leaving it open to some volatility just like ADA. But the smart contracts will prevent anyone from minting new Shin tokens immediately after the smart contract reaches a maximum threshold to avoid diluting existing holders. Bargeffen's description of JED as a safe haven might not be the case, as various community members have expressed concerns comparing the upcoming project to Terra USD, and even assurances given by the team are not enough to suspend this fear. A community member was seemingly perplexed as to why another algorithmic stablecoin is on the horizon despite Terra proving that they could all go wrong. It's one of those "haven't you learned your lesson" kind of things. Another Twitter user wrote that they would rather keep using Tether as an algorithmic stablecoin, which has already proved that they are not stable. With these overflowing concerns spurred by the advent of JED coming out, there are questions as to whether stablecoin projects still have the potential to succeed despite the failure of Terra. According to Tether, stablecoin projects like Terra had mechanisms designed to attain stability but failed in the end. Unlike collateralized stablecoins where each coin is fully backed by collateral, algorithmic stablecoins attempt to maintain their value via various market operations that have frequently been broken down dramatically, Tether stated. Algorithmic stablecoins have a future and they will present various opportunities. Remember that one bad banana does not necessarily spoil the whole bunch. Besides, gas transaction fees are an ongoing issue in the crypto world, and paying fees for using a stablecoin like JED removes some of the uncertainty for Cardano users. I believe that adding the JED stablecoin to the Cardano blockchain will significantly improve how transactions are settled on the platform, Bar Geffen told the Cardano Summit audience last year. Stablecoins are a crucial part of the burgeoning finance industry, which takes the middleman out of traditional financial services like loans and interest-earning accounts. In the long term, the JED may indeed address several uses for developers, especially with DeFi. Its launch could skyrocket the ADA coin price to $10. Cardano continues to deserve its top spot on the cryptocurrency charts. In October, Charles Hoskinson announced that he would be accepting ADA at his restaurant and whiskey bar in Wheatland, Wyoming. A Twitter user identified as Clover Earth Node asked, "Hey, at IOHK Charles, is your new restaurant going to accept ADA as a payment method?" Then, Hoskinson gave a positive reply. Back in July, he explained that he would launch the venture. He also claimed that he would make his restaurant crypto-friendly, and he kept on reiterating that sentiment. Market participants and ADA enthusiasts will keep watching to see how well ADA performs as a payment method. The restaurant has not been swift to accept crypto for payments, but this does not imply that ADA in particular will fail. The crypto market is still widely affected by the broader economy. Inflation fears remain high, and possible interest rate hikes could pose a damper on any market rally. Amid this situation, the Cardano founder has gone ahead to outline the new privacy protocol coming to the Cardano ecosystem. In a recent interview on Corey Costa's YouTube channel, Hoskinson explained that Cardano's upcoming privacy protocol, Midnight, which was announced last month, is targeted at creating a confidentiality network of smart contracts, similar to what Ethereum did for Bitcoin. Hoskinson claimed that Midnight aims to solve the paradoxical problems of having privacy and disclosure laws simultaneously. From his perspective, which is a regulatory one, people are not allowed to use blockchain systems for privacy because of the Bank Secrecy Act, General Data Protection Regulation, and a bunch of others. And anytime they engage in regulated business, there is a privacy requirement. Regulated business requires one to give away some personally definable information, and there is a privacy law that states one will have to keep it a secret. Now, this is where Hoskinson comes in. Quote, "The problem is that if you try to do it in a blockchain setting, your private information becomes public to everybody. So it makes sense for me to find a way to create a confidentiality network. So like what Ethereum did to Bitcoin, where Ethereum said, we have programmability, Midnight does to Cardano, where instead of having a privacy coin, what you do is you have a confidentiality network and you have smart contracts that are private." End quote. According to the Cardano founder, this is the most difficult task Cardano developers have taken up until now, going as far as to stating that it is making the development of Cardano somewhat like child's play. It's a really hard product. It's the hardest product we have ever worked on, and it makes Cardano look like a kid's play, he added. At the end of the day, Cardano won't stop thriving, building, and growing. And because of this, a skyrocket in price is greatly anticipated. But of course, what are your thoughts on this? Let us know in the comment section below. We'll see you in the next video, but before then, check out our other videos to find out how Cardano is living up to the dream of being the Ethereum killer. And as always, make sure you click on the subscribe and notification buttons.